Welcome back. You are with the CNBC TV 18 Investment Guide, and this week we are discussing the consumer sector. How should your portfolio be designed if you want to invest in the consumer space in the post-COVID world? Now, it becomes important to keep market psyche in mind as well. So, Sonam, which is why you mentioned for the discretionary part that valuations are elevated, and that's something we have to learn to live with. Now, I want to ask you the same question on staples. But let's also keep in mind that this is a market which is increasingly looking for ideas on economy-facing stocks, on power, on capex and things like that. So then would it still make sense to buy, a Lever or a Britannia, all of these stocks at 50, 60 times?
So actually it depends on your horizon. I agree, if you see the last 9 months, the market has broadened itself. And whether it's industrial capex, whether it's cap goods, whether it's commodities, utilities, all of them have made, investors have made a beeline for them. That being said, very few sectors in India have such a strong profitability mode, such a strong ROE, ROC as the FMCG sector. So in the short term, the weights might come off a little bit, based on allocation and trends. But any portfolio which wants to compound over the long term, I would find it very difficult for them not to have any FMCG stock in their portfolio. Very, very difficult, and it's very sticky. These are here the once an EBITDA comes, it's very sticky. It's not that volatile. So you pay for that visibility and durability of earnings. To some extent in cycles, we have seen earlier as well, where valuations sort of come off a little bit when economy-facing stocks are doing well. But give it some time, it always normalizes.
Okay, fair enough. So that's a strong case for FMCG stocks despite the high multiples. Abneesh, come in on this. How much is still left on the table, so to speak, in the current market context? I go back to the point, the market right now is also looking at the capex side of things.
Yes, because of the budget tilt towards capex cycle and also HNI is playing a big role. The good thing is FMCG valuations are far, far more reasonable. So Hindustan Unilever, Nestle, etc. haven't really given a very good performance, which in a way is a good thing. Because of the pandemic, a lot of the cost structures have definitely been realigned, and there are a lot of cost savings which will continue because of the automation. Second is there have been big opportunities in the consumer demand, health aspect, and many new products have been launched by most companies. Plus, currently, Street is worried on the gross margin side. The good part is these companies have very strong pricing power. And if you see the commodity cycle, we haven't seen such a lengthened time period of high inflation. So my sense is second half, we could see margin expansion. First half, clearly, most staples companies will see margin compression. But rural demand will come back. Wave 2 has derailed the rural demand. My sense is it will come back because of good monsoons and because of very good stimulus programs. We have got 5-6 key state elections. So our top picks in FMCG will be Godrej Consumer, and we also like Hindustan Unilever. HUL has underperformed because detergent and out of home have suffered because of wave 1, wave 2. Hopefully, those should see a structural comeback once we have the vaccines really picking up. Godrej Consumer, excellent company because of the new CEO who has been hired, Mr. Sitapati from HUL. So these are the two bets for us in the FMCG space.
Okay, let me ask you, Abneesh, in terms of the expected volume growth trajectory. The thing is that everything is so skewed over the last 1.5 years thanks to COVID. X of COVID, what is the sustainable volume run rate that you will expect for some of these FMCG companies, the ones that are your top picks?
So this year will be a mix of price growth. In last 2 years, price growth for FMCG has been extremely low. So we will see most companies see 4 to 6% price hike across the company. On your question on volume growth, yes, Q1 will see impact on the rural side because wave 2 has been very widespread. So I will say taking that into account, still most companies should see a very good growth. Yes, base is also quite favorable because this time it was not a hard lockdown. But if I see the next 2-3 years, most of these top picks should be able to grow at 7 to 8% volume growth easily. Plus, we'll have that 2 to 3% long-term pricing growth also. Plus, slight margin expansion, definitely because automation is possible. So we can look at a 12 to 13% EBITDA growth for these companies from a longer-term perspective. FY22 definitely has a low base, but yes, there is a gross margin pressure also to take into account.
Okay, got that point. Sonam, so let's start sort of rounding this up for our viewers. Among a lot of the points that you made, given the current landscape, given what you feel about the digital push in businesses, what sort of consumer businesses are you most optimistic on? I know you're not going to give us stock names, but at least some idea of the themes that you're looking at.
I've said it earlier, consumer appliances is one space which has a long road ahead of them. That space we like. Quarter on quarter, there may be variation, but over the next 5 years, it can compound money, essentially. On the online B2C space that we talked about, whether it's QSR, whether it's aggregators, whether it's financial marketplaces, even online ticketing, that is the space that we like. And any segment that is talking to the youth directly, that is also, we are very excited by that. We will continue to focus on our portfolios on these themes. We think this can compound materially over the next 5 years.
I have a feeling you will be watching out for the Paytm listing very, very carefully, given everything that you say, Sonam. But that's on a lighter note. On a serious note, are you expecting anything more from the unlisted space, the fresh issues that perhaps might come through the next 1 year, where there could be something interesting from the consumer perspective?
So I think these names are pretty well known. I mean, there is an impending Zomato that is there. You talked about Paytm. There are other online. Why only consumer? There is, say, for example, a Policy Bazaar, which is not strictly consumer, but it is talking to the consumer and servicing consumer on the insurance side. Valuations are separate, and we'll take a call there. But those are exciting spaces to sort of look at. That's a growth area that we would look at positively.
Okay. Abneesh, I mentioned you I heard you mention some of your top picks, and there's Titan and there is Lever. From what you said, there's Godrej Consumer. From what you said, it's basically a return to the knitting, basically. The old czars, will they continue to rule, or do you see new stars on the horizon as well?
I think in terms of valuation comfort, Bajaj Consumer is looking interesting, inexpensive valuation. And they also had a turnaround CEO from Asian Paints. So that is looking interesting. Yes, near term, there is a gross margin pressure because of LLP, but that will give them opportunity to gain market share. So in the smaller names, I think Bajaj Consumer definitely is looking really interesting. They have addressed most of the promoter concerns. Pledging is down to 0. They have gone back to the dividend, almost 10 rupee dividend they have paid out for the year. So that's looking really interesting in the valuation comfort small cap zone.
Okay, now gentlemen, final thoughts. We've come to the agreement that you can't judge a consumer stock purely by looking at the price to earnings multiple, right? So Abneesh, you tell us what would be the 2 or 3 most important criteria parameters for you when you are deciding whether this is a stock that you like or not.
I think in consumption, market share gain is extremely important. Second would be, what are you doing in terms of disruption, as Sonam also rightfully highlighted, in terms of e-commerce and omni and direct to consumption. That is very important. And third would be, what are you doing intrinsic to the company in terms of automation and robotics and all that. So I think these 3 are the most important. Fourth, of course, is innovation. So these 4 would be the most important parameters to judge any consumption company, not necessarily FMCG. It could be from any consumption vertical.
Got that. So in the post-COVID world, please do not only look at the price to earnings multiple. Sonam, your thoughts on this and your key filters that you will run these companies by?
So I think market dominance is something that we look at, whether that will continue or not. Ultimately, it is very well known fact that almost 80% of a segment's profitability is owned by the top three companies, and if you can dominate that, then it gives you some amount of visibility, and for that visibility, higher valuations therefore can be justified. And that is one. Ability to generate return ratios, and how fast, how far, how much you are innovating, and how much you are talking to the young consumer. India is a young country. If you focus on that, I think your future is secure. That's how I would look at it.
Okay, and that's a lot of food for thought, shall we say. Gentlemen, thank you very much. It's been a pleasure talking to you and getting your inputs on the consumer sector and the way to approach it in the post-COVID world. Many thanks for watching. That's going to be a wrap on this week's edition of the CNBC TV 18 Investment Guide. We'll see you next week with another theme.